is Red Ben, first of all, Red Ben Trader. At Red Ben Trader on Twitter. It is Wednesday, February 8th, 2023, and we are going to take a look primarily at the NASDAQ. Unless someone wants to look at the ES, we can do that too. But we're going to see if I can find some trades this afternoon. We had an interesting morning. I'm up on the day um, and willing to take another trade if it sets up, but the price action has been not particularly preferable, especially early on. And then there was one basically uh, big trade opportunity to the downside, and now I'm guessing that this one is to the upside. I had a really good entry to the reversal for the long, and decided to cut it early, unfortunately. So trade management's really tough. It's one of the hardest parts of this business. I do trade in a trading room, and but we are full at the moment. But if you want to talk to my coach Simon about the algo, or just trading with a system, or possibly to be put on a waiting list in case whenever we open again. His email is trade letter n wordperform at gmail.com. Okay, so if you have not seen my streams before, this is going to look real busy, and my apologies for that. I'm not going to go into explaining everything. I've got plenty of live videos and instructional videos out there that talk about each and every one of these signals, well, more or less. Some of them are directly from the Trade and Perform algo, which is Simon's proprietary algo that we use in the trading room to find trades and analyze the market. And then I've changed some of the colors and just the display, and then added some of my own signals that I also use. Something I've been playing with a little bit. Let me show you this. So I've been working on trying to simplify things. And so on another screen, I'm watching a chart that has just a few of the signals, and I'm playing with which ones I want on this secondary screen. It's the exact same thing as this, but just with less signals. See that? So, like if I do this, oh, I guess I can't do that. Well, yes, I can. So if I do this, you can see that they're the same chart, right? The only difference is that this one has more signals and this one has less signals. So I've got the less signal one on another chart, and the reason is because and this is in case anyone's curious, it's the 24 tick Renko chart of the NQ futures. So the reason I am doing this is, first of all, so I can have a view that, oh, can I not see these? I gotta be able to see these. I can't get over there. That's annoying. Okay, I guess I can't put it over there. How do I? Okay. The reason I've got this secondary one is so that I can, first of all, hide all the drawings from the other time frames. Sometimes it's helpful to have, for instance, the higher time frame levels on here. Let me just fix this too. There we go. Sometimes it's helpful to have some of the higher time frame and the levels from the PNF chart or levels from the footprint. Where to go? Where's my not sorry, the profile. Like I need these zones so that I don't trade into an area that I don't expect to be broken easily, like an anomaly. You don't generally expect those to break easily, but at the same time, if you've got enough momentum, they can. So I've found it recently helpful to actually have two. I've got a lot of screens on my desk and stuff, but or around my desk, but having less on here can help me, and not having to look at all the lines. Even though, like I said, the lines are important for making decisions, they're not necessarily important all the time, particularly when you have a lot of momentum. So being able to hide, what's going on here? Oh, that's because it's the wrong one. Hold on. I've got too many damn screens. Okay, so we need and Q. Where'd it go? There it is. So I'm gonna have to make this like bigger, otherwise it's gonna get lost. Okay, I didn't think about that. I guess yeah, I can. Yeah, it's okay. I'm not going to be able to show two different screens at the same time, but this one's normally on a separate screen. But I wanted to demonstrate how having, I guess I got to be careful not to click over here, otherwise it's going to disappear. Having less lines on the chart and less locations on the chart can help me determine whether or not like there's any momentum in the market, because I can very easily see just the information that I need, and then I can also identify new levels that I can then add to this chart. So if there's a important, like even without the algo, if I could just see, like here, I'll show you what I'm talking about. So if I turned everything off, every tool on here, there's price action levels that might stick out as being important, like this one here, and this one here, right? And these are my voodoo range levels, but if I see them here when I don't have all the extra lines, I can add them, and then it'll also add it to the other one. But here, before I go back, let me just show you what's happened today. So we opened higher. Oops. So we traded up yesterday into the close. It was a very volatile day. Here, a very volatile day on Tuesday. There we go. There we go. So on Tuesday, we had a volatile day, and there were a couple levels that I found important on this time frame. And you can see overnight, we've been distributing, and then we opened here, couldn't get out of that, couldn't get higher than that first 30-minute range here. I've got an indicator for this, but it's this. We couldn't get beyond that and hold it. There we go. We couldn't get beyond that, right? And then crude inventories came out and we dipped under it, and then it became resistance. So that became where all the buyers were trapped, and you can see that I already had actually a level there that was important yesterday, and it continued to be important. That level came from here on the way down. Oh, sorry, that was Friday. That was last week's important level at the close. And so that ended up, it's been respected more or less. And then when we get over it and give it up, we tend to have a pretty big roll. See that action there? So we did pretty much the same thing here. And then you can see this is a very important area. Yesterday's low. And then Monday's low is actually lower than that, if you look. I've got it on the other chart, but Monday's low is here, and Tuesday's low is here. And so this pattern where you need, okay, share something kind of. It's probably Wyckoff or something. I honestly I don't know what it's just something I see a lot. I'm sure there's a name for it. But when you see this pattern, it's really obvious on Renko, where you shoot down, you try to come up and you make like a lower high and then a lower low, right? It's sometimes you can make a couple of those, but you need the lower high, and then soon after a lower low, and then a higher high and a higher low. That little pattern there, whatever, I don't know what it's called, but I see it all the time. And it's a really solid sign of absorption when you can actually see it on the footprint as well. But once you've left that area, it's gonna act as support more often than not. And if you want to know where it's gonna act as support, You can actually take that whole area here before. See where it breaks out of it right here. So we want to go before the breakout, and we're going to see where the volume is on there. So that is the level, more or less, that needs to hold. And actually, if you took the volume area of this, oops. So if you turn, you can turn on Sierra chart, you can turn it on, but I can see where 70% of the volume is. It started right about there, and it goes to right about, we'll say, the voodoo range level, basically. So that, generally, if you can break in there to that, the volume area of that consolidation, that absorption area, if you can break in there and hold inside there, you're almost always going to travel to the other side of that value area. And then oftentimes you'll go lower. But if you can get out of it, if you can test it and not break through it, and particularly if you don't get all the way to the VPOC, which is what's normal. Normally, the way this works, here, let me start over. Normally, the way this works is you pull back into the VPOC, and the VPOC acts as support. That's the norm. That's what should be expected. But the statistics say that if you get in here and reject, the chances that you're going to come to the other side of the value area are super high. Okay, whereas if you don't reject, like we did here, we did not reject on the first retest, right? Right here, we bounced out of it. Then if this continues to act as support, that VPOC, it becomes basically a naked VPOC, and it can propel us higher by not touching it, which is weird. Like you'd think it's the opposite. Now that push higher is usually short term, like maybe a day, but tradable, very tradable. Maybe not with a swing trade, but definitely tradable. The other thing that can sometimes happen with these is you sweep under the lows, collect the stop losses, get everybody capitulating, and then rip. But that becomes less likely when you have, remember, that low from Monday just below this one. You'd need to get under all of this. And if you got under all of that, well, it's probably not bullish. So all of a sudden it's like, okay, so we really probably can't handle a push under there, more or less, is what I would guess, because we'd have to, like I said, you can move through this relatively easily, normally, and this pink line, the VPOC, is going to act as a magnet. And so that whole area here, that whole consolidation, it needs to act as support for the bull move to continue, more or less. And remember that if you break in here and you stay in there, or if you reject off of there, or even if you just kind of like wiggle around in there and you can't get out, chances are you're going to come over to the other end at 12,478. That's the norm. And like I said, the VPOC being of this consolidation being so low, it you'd think it would attract price to that backside easier. So the bears shouldn't have very much trouble breaking in there. That's what I'm trying to say. When they can't, when we get a bounce out of it, that's a very tradable move. Okay, it's not necessarily going to continue, but it can for like at least a day or two. But sometimes it's just a rotation. But when you see, and it works in the opposite direction too. So here, let's find one in the opposite. I'll just give it all away. Why not? Here, I'll show you. We'll find one on the opposite side. I don't have enough here, so we could probably do it on a different time frame. But this might still work. So what we need to remember is a lower high, a lower low, a higher low. So here it would be the opposite of that. So it would be it would first have to be a lower low, is what we would need first. So, and then we would need a higher high. So we didn't quite get it here. No higher highs in here, right? Really? I mean, unless you went to a really small time frame. I guess we could do it on a small time frame. Let's see if we can find it on a small time frame. Higher high than this high. So lower low. Here we go. Lower low. Higher high, right? Higher high. Wait, am I doing this wrong? Am I backwards? And then we need a lower high, right? Lower low. I'm a little confused. Hold on. So on the downside, it's lower high. So it's a retracement with like against the trend, a counter trend retrace, an extension, right? So lower low, and then you need to right lower low, and then you need to make let's see, lower low here. So it would be lower high, no higher high. It's got to be higher high. Yeah, because it's coming. We're inversing it. So it would be yeah. So I do need a higher high, and then we need a lower low after that. Yeah, we didn't quite get it here. This would have had to be reversed. We need the higher high. Oh, here. We might have it right here. High. Higher high. Lower low. Lower high. There we go. Finally. I was like, I know it's in here somewhere. Okay, so now beginning with that retracement of the primary trend, which was bullish. So this to where it turned, where it broke down, which is I mean, depends. I don't know if you want to count this one too. It'd be at least this, right? Then the idea is, if that's your distribution, as we break out, I knew we were going to. I probably should have just been trading it, but I took the entry earlier and let it go, and I kind of wanted to let it sit for a second. Okay, so if this is your distribution range, then we have more or less the volume area, something like that, right? So the idea is, once you've created it, right, which happened, and then broken down, if you come back in, you need to immediately reject out of it, and it can become resistance. If you can't reject out of it, you're going to travel all the way through it and potentially break through. But now this is where it works better. See where the VPOC is? It's at the bottom, right? It's near the value area low of that consolidation. So you can tag the VPOC, which is the magnet, and then reject the VPOC. And then the VPOC becomes the trade entry on the retrace. Here, I wasn't as confident that move was going to last because our VPOC hasn't been tested yet. And usually they are. And for it to get tested, we have to get to almost the back of this range. So the thinking was, I don't know if this will work for a bigger trade, but I knew that this bounce was viable for at least a little while. So that was my thinking. I can show you the actual trade. Let me turn the, shit, I fucked that up. Can I fix that? Undo chart. Damn. What did I do? Right there. Okay. All right. Okay, hold on real quick. Just check on this. So here, so we're gonna put the couple studies back, align the studies, right? And then we can, yeah, so the drawings from the other charts are hidden, see? So we don't have all that information. We only have the ones that we marked on this chart. And so you'll see that this is that value area of the consolidation. That's the gray here, right? That's still there. So my trade, and you won't see the trigger here, but was here, and I took the one and I was done. And I could have held it. It in fact came back to my entry. But I wanted to show you something with this dotted line here, this magic line, which is pretty cool. Hold on real quick. Let me just check on this text. Okay, I think all's good. Okay. So if you look at that, and again, keep in mind, like this is on a different screen, right? This is the exact same information here, but with extra info on the left, and then this one is just the faster time frame. It's 15 tick. So once we've identified those important areas, and like I said, I can use this line to tell me some things about momentum, we could then jump back in here and be like, okay, it appears that things have the potential to be bullish. Oops, I'm trying to grab that arrow. There we go. It appears that things have a potential to be bullish, and that this might be new support right at yesterday's. And then when you open up, when you unhide everything, you see, oh, that was also yesterday's point of control for the day point of control. The regular trading hours point of control was right there as well. So we're also trying to bounce off that. It's the same spot. So, sorry, a couple text all of a sudden. So yeah, it's a spot. The yesterday's point of control is a pretty normal place to get the market. It's where the market wants to go generally, to see who's in control of that area. Yesterday's point of control, and usually we get a lot of chop in that area, which we got a nice little absorption there. And then my trigger was on this blue square. When they come after stars in the opposite direction, so star in one direction, and then blue square, star going down, so yellow star, and then in the same range or right after it, blue square up. So it's called star box. That's what I call it. So that pattern, when you've got momentum or you know what direction it's going, is actually pretty strong. So now we've gotten dominant waves to the upside, and we can start looking for bull pullbacks to enter the trade, as long as we don't have too much resistance ahead of us. Now we do have some of these levels that were identified on other time frames, higher time frames up here, so we might run into trouble here. It might not be able to break through. So whenever I have like a lot of resistance all in the same area, I generally will try not to be too aggressive right into it. It doesn't mean it's never going to break, but it's often going to need a couple tries. So you can see here they actually tried it once here, and they couldn't reach the area. Then they reached the anomaly and all these little levels, and they kind of chugged through it, found a big seller. The aggressive sellers came in, and pushed the market down, but they broke this low and dropped back in. So that was the entry when we were reviewing that I probably should have taken. If I would have been watching, I would have taken it. Because that's a valid entry. It got underneath one of these apexes and closed bullish on the very first bar after getting under them. So it's not surprising to see a rip here, but I would be taking profits because I don't expect all of this resistance just to like rip through with no with one attempt. I mean, we've already had one attempt, so it technically could work, but we'll probably need a bit of a pullback. If you see this line here, this dotted line, I'm not going to go into how to build it, but basically bulls need to get the yellow line here above the dotted line on a bull bar, so one that's white or green, and that bull bar can't be pink. It's got to be white or green. And so the bull bars have the wicks on the bottom, and the bear bars have the wicks on the top. So if we can get the yellow line on bull bars like this above the dotted line, which happened right here, pullbacks generally can be bought as long as we see aggression to the upside. So and here it's easier to see on here. So without all the extra signals, dotted line, right, shifts down, yellow line shifts up, and we get yellow line above dotted line on a bullish bar that's not pink, right? So a white or a green bar with the yellow line above the dotted line. That is our sign. It's not an entry, but it's a sign that bulls are likely in control. You can see we got it here too. See how the yellow line got above the dotted line? So it's not a great entry, but since bulls are in control, the next time you get an aggressive buyer, which again you can't see here because I've got those signals turned off, you can take a scalp higher. Now look, this one, you'll see it's got a green outline. See that? So that green outline is my trigger bar. And this green inside would have worked too, or a white star. Any of those would work. And so that would be an entry. And then see, they did it here. Look, they did it before this one too. Watch. So it's two steps. First, you need bulls in control. You need bull momentum. Then you need the entry bar. And that's why I'm doing it with two different screens, because if people aren't used to seeing all the entry signals, it's too much information. So dotted line, right? Bull bars, yellow line above dotted line, right? The next aggressive signal on a pullback you can buy. That's this one. See that? So these were the bars that were above. We don't buy this. We wait for the aggressive buyer to come in and we follow him. We get the scalp. And then it's same exact thing here. Exactly the same. Bulls get the yellow line above the dotted line. The next aggressive signal up gives us a scalp. Next aggressive signal up gives us the scalp. And then the one I took was right here. Oh, sorry, one more back. Well, here, this one works too, though. So, whoops. So if you look real close, did the wrong one, sorry, hold on. Yellow line, whoops. Yellow line gets above dotted line, and you can see the little dash is where they're interacting, and that happened on a bullish bar that was white, right there. And so then the next aggressive signal, I'll show you on the other one, would be an entry. The next aggressive signal is the star and the box. So that was my entry. So that's how that works. It's basically just two steps, right? And it's hard when you don't know what all the signals mean, and you're not used to like seeing all the signals because you don't know what you're looking for. But that's how I'm thinking through it. Is have I gotten? If you want to just look from the bull side, because it's a lot easier to explain it that way rather than switching back and forth. But it's like if I know I want a bullish trade based on price action on the higher time frames or whatever, and location and stuff. I need bulls to have momentum. I need to be able to get the yellow line above the dotted line. And then I need the next entry signal. Now this was technically the next entry signal after that. So they could just rip it. I personally would prefer a pullback, but we already got one. So I could probably take this with small size. Fuck, I'm a little late. I could take this with small size, but it's pretty aggressive right into resistance. So I'll skip it, but just realize it technically triggered and it might work. But we have a lot of resistance up here. So it doesn't have to work. I mean, let's put it this way. It can work, but not really go anywhere, right? So there it is working. Now let's see if it actually goes anywhere. Do we get our 10 points? Because I didn't take it. I talked myself out of it. The way to trade this would have been to get it on this pull. Once you see the green, buy it on this pullback and see if you can get 10 points from there. That's the way to trade these into resistance if you really want, or just skip it. But this is why if I was only trading from this and I didn't have any of the levels, I might miss an exit or take an aggressive trade in a spot that I didn't want to. But when I got the additional levels here, I'm not necessarily I'm not trading off of them, but I'm using them to kind of say is this a busy area or is this an area with a lot of empty space? Because here I would really want if the momentum was to the short side, I'd be very happy to sell this level. Right? The level should be sold until we get over it and then bounce off of it and then it can be bought. Generally, that's the safe way to do it. But you can't just sell because you're at a level. You need price action. You need trapped buyers before you want to do any selling. And to get trapped buyers, we need to get, it's the same thing in reverse, the yellow line underneath the dotted line. Well, unfortunately, right now, the dotted line is significantly underneath all our resistance. So by the time we got that signal, we would then need to wait for a pullback and then could sell. So it could set up. It's just not going to set up on this bar. And so that's where it gets confusing is you can see what looks like an aggressive signal. You might get a star to the downside on a smaller time frame. That's not necessarily a sell every time. But when you're looking for a sell, that's the signal you might be waiting for. So being able to not just autopilot and start selling every single star you see because you'll get totally crushed. Instead of doing that, you need to have a process for when can I sell or when do these signals start to work. So they might just rip right through this. And that, like I said, I knew that was a possibility. I would have gotten my 10 points had I gotten it on the pullback, by the way. By the time I thought about it, we were here and I would have gotten it. But let's like I said, whenever you have all these levels are from either the profile or a higher time frame. So when you have so many in a row, you need a lot of momentum just to push through them. But we did test this one before, see that? So this one might be done. I think we re-auctioned that pretty well, and then we tested this one, and now we're probably going to re-auction that one. So we probably go to 610, if not 618. So it probably would have been worth taking had I thought it through a little more carefully. Another hint that you're bullish, there's all sorts of ways to decide whether or not there's momentum, but I use the volume zone oscillator. I really like how it displays momentum of volume rather than just price. So I could see, for instance, that even though we got really deep, we got to support, if you look, the volume zone oscillator, it had trouble getting under the zero line here, and then dipped under the zero line, but in one bar came back above the zero line. So that gives me more confidence to buy that. If this bar would have printed bullish, but the volume zone oscillator just kind of is right here below the zero line, it's a sign that there's not any aggressive volume, and I need there to be aggressive volume if I'm going to take a trade like that, where I'm trying to turn the market. You need aggressive buying for that to happen. And you get aggressive buying from sellers getting trapped and then suddenly being forced out, basically, because if they're weak hands. Okay, so let's see if this acts as resistance. I'm not going to sell it regardless, right? That's not part of the plan. But if you look, the dotted here, I'll show you here. It's easier to see here. So the dotted line has shifted up. See that? So the line in the sand, if you will, for bears to try to take this over has risen. But if all they can do is get a purple bar to print, it's not enough. They need a brown bar or an orange bar to print under there, and then retraces could be potentially sold. But yeah, when you see it shift up like this and not immediately drop back down, it's usually a pretty clear sign that momentum's actually building to the upside. And so if you were thinking about shorting aggressively, you probably want to reconsider. The better here, let me find a situation where you get it, if it's going to turn on you all of a sudden, like without getting a retrace. Let me show you. I mean, sometimes it does, obviously, but what you'd be looking for if you think like, oh, maybe this is going to fail, is you need this dotted line to immediately drop back down to a spot that it's been to for a while, like here. So see here, I'll find one back here. So see how they go up and then immediately fall back down? That's bearish, right? They tried to shift it up, and it's like, nope, shift them back down. That's where you get aggressive bearish, right? Or they leave the area, and the line just doesn't follow them. Now when you break down, it's not coming back. See that? But when it goes like chug, chug, and then dip, and then you break it, this could be your pullback entry. Let me find a trend quick, and I'll show you what that looks like. Here, so see how it starts to lift, and then if they break it, you get the pullback when that happens. So that's that here too. See, lift, get under it. You had a chance to short later than that, right? That's not your last chance. Whereas if it's been stable for a while, or it goes up and then immediately drops, you're probably not coming back there, right? So here's another one. Up, immediately drops back to that area. Don't expect to short from up here anymore. Take the lower high. Hopefully that makes sense. And then see this. Here's this one again too. Leave the area. It can't shift up. What happens when we break down underneath it? Usually selling. Right now, in this case, we shifted it back up again, and they gave you one more try on a lower high, but that was on a bigger time frame. So you got it. Everything's fractal. But when we come back here and look at what's happening right now with that same signal, you can see that we shifted it up. If they were going to break it, it would have been right here when they shifted it down, and they couldn't do it. So pink bars now can probably be bought if we've moved through some of that resistance. Again, I could have taken it, but all this resistance is causing me anxiety about chasing, because if they run into problems here, they're gonna break this line, and then the retraces can be sold. So they basically need to push with heavy buying. Otherwise, it's not going to work the first try. But if you hide all that, you can see that if you didn't know about the other time frames and the profile and stuff, it would look pretty dang bullish. You'd be like, we're going higher. But the truth is that look, it this last little push, it didn't climb with price. See that? So that means that if they can take it back, it's probably gonna turn around. And then when you look at, and you realize that you've got like an anomaly here and all these other areas that were important in the past couple days, you realize that they're probably not just gonna rush right through it. But they could. They could. I'm not gonna be the first one to guess that they're not. I'm gonna wait till it happens and then take the trade. I want the layup. And if it happens if I get fouled and I get an extra point or two, like cool, right? But I'm not gonna go for the half court shot just because sometimes they work. I'm just gonna take layups all day, unless they leave me totally like if there's no one there and I've got an opportunity, I might take it. But usually, I'm just taking layups, and then hey, if I got a runner that happens to stick like this one would have, like I'll stumble into 50, 100 point trades. But what I need to make money consistently is to have setups that can give me 10 to 12 points regularly. And I mean, I'll show you how I'm doing. So, I was trading smaller today, but I've got this is typical for my win rate. Okay, that's typical. Like 70 plus is actually pretty normal. Had I traded bigger size today, I would have been doing really good. But I'm working on this. Like as you get closer and closer to so the way these Apex accounts work, like one of these is a performance account. Unfortunately, the one that's got the smaller PA is the performance account. So I'm just being a little bit cautious there and not trading heavily because I don't want to blow it up because it's new. And then the other one is an evaluation that's close to being qualified. It's like less than $2,000 to being qualified, and I usually average like maybe 700 a day, let's say. So I don't want to trade full size in there because if you make money and then you lose it, it counts against you as if like worse than had you not traded at all. So you need to be really cautious as you get close to qualifying them. But I just want to like that when you have a system that you just run and you just wait for that trade and then you take it. Like having a really good run rate is not as hard as it sounds. Like the reason why everybody has a hard, the reason why keeping your win rate up is hard is because you're trading too much. Almost guaranteed. Like because I still do it. Like when I don't have a strong win rate, I overtraded. I traded things that were not great setups that don't get in the basket very often. You know, but the thing that's different about trading versus basketball is like the points that you get for each shot has nothing to do with how hard it was to get it. Like it's not a fair game. It's like sometimes you throw from the 3-point line and it still gives you just 2 points. And then sometimes you get a layup and it gives you 100 points. So like, because that's the way it works, like, in my opinion, I'll just keep taking the layups. Now I have been working with my coach, Simon, on trying to catch the bigger moves, particularly in ES. ES trades a lot more linearly than NQ. NQ will have all these little wiggles in here, and all of those have potential for trades. But with ES, I'll show you. With ES, the signals are the same and stuff, but you're gonna have more linearity. See that? It's just like bullish, pullback, bullish. It's a little bit easier to read for a lot of people. Me too. It's just that the opportunities for those small moves aren't like okay, here, I'll show you. Here, right? You've got just chop, 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 chop. It's like untradeable. There's nothing really to do here from like 10.27 to 10.54, right? NQ probably gave at least 10.57, 10.27. So look, this was tradable. This was trade. I took that trade, So there's just more opportunity with NQ, and so that's why I trade NQ. If I wasn't using the algo, there's no way I would trade NQ. No way. It's way too hard without a system that actually tells you, like, okay, now it's bullish. Okay, now get in the trade. Like you need that structure. You should have that structure anyway. But if you don't have it really clamped down, you're better off focusing, in my opinion, on big picture trades and try to make sure that when you're right, that you get paid for it. And on NQ, that's really hard. Not impossible, but hard. Because you have to hold through all of this, like, ambiguous stuff. Like I was just showing you, like this. Like if you get in down here and you have to hold through all of these moves and your P&L is shifting like $700 every time, like per contract, every time you make a move. So like you make 1,400, now you're down to making 700. Now you're making 1,500 or 1,600. Now you're back to making 500, right? Like that fucks with your head, you know. Whereas with ES, it's not quite that extreme. I mean the dollar amounts can be, but it's like it's slower. It just doesn't wiggle as much. If you want to get out, you're probably going to be able to get out. With NQ, sometimes you don't really get the opportunity. Like those little moves, those 10 to 12 point moves can happen in a flash. And so yeah, if you're trying to trade off like a Dom, it's really tough. But with the algo, I can do it. So I prefer having more opportunities. But like I said, I'm working on trying to use like a higher time frame of ES. Like here, this is the 10 tick. I don't know if I've got the right settings on here, but so this is the 10 tick of ES, like a bigger picture of ES. And so some of the things we're working on is figuring out what patterns work best on this higher time frame. So for instance, identifying here, we'll just use the same idea, right? So you have the yellow line getting underneath the dotted line on a bar that's not bullish or purple. And then your pullback is where you'd want to enter, right? All of these are good trades. See that? They all give you some kind of an entry signal, and you could put your stop behind them. So here, you'd be getting in at 69.50, let's say, if you waited for that to close. And then the problem is where do you put your stop? But I think for sure you could put it up here at like 75. That's just yeah, I mean you're gonna have a bigger stop when you're wrong, but your direction would be right. And then what's cool is you can take this and you can say, okay, I know I want to be bearish. If that's too big of a stop for you, you can say like, I know I want to be bearish right here. I just need a pullback. So now go to the 6 tick in that same exact spot and look for a bearish entry on a pull right there. Same exact signal, just smaller time frame. Now you're getting in at 74.50 and your stop is 79.50. Yeah, that's it. That was it. And so there's plenty of opportunity on these for bigger. See how like they're not breaking it? Like you could take this one or this one and you're still safe. See that? That's the benefit of using the higher time frame, is that all of a sudden all of these entries start to work. Rather than if you didn't know who's in charge in the higher time frame, like maybe half of them will. Like if I try to do this the other direction and say I'm going to start buying every diamond or star, like this one fails and then it works, right? This one fails. This one, I guess you could buy green and get, but you're going in the wrong direction. That's why. This one fails, this one fails, this one works, right? So all of a sudden you're down to like a 25-30% win rate because you're trading in the wrong direction. But if you then look at the bearish ones that are at location, right? Like you have this one, I wouldn't trade down here. You got to get the pullback, right? The aggressive, if you're going to be an aggressive trader, you need to put your stop up here. Like why take that risk? So this one, all of those work. This one you might have gotten stopped out on. That would have sucked. But then you could get back in here, right? This one, right? And remember on the 10 tick, we identified that this was bearish way back here, and that continued until that changes. You know, you have to take back one of those levels for that to change. It hasn't changed. Right? Now look, here's where it's you could say on this time frame we got above the dotted line on a bull bar with the yellow line got above the dotted line. So now you could say, I'm going to start buying green bars, stars, and diamonds. And you can take a counter trend move. So it's not like you can't trade against the. You just need to know that that's a short term move, right? And so there's another one. Now we've gotten. Oh no, couldn't get under it. Oh, that's where we are right now. So here, the dotted line is right here. So it's been bullish, right, since here. 11, like noon Eastern. It's been bullish. But now we're sitting right at that dotted line. But look, they put a purple bar under it. So if this bar is a star up, like you can actually buy ES. I don't know what. Yeah, you're in an area of resistance. That's the problem, and you've kind of already stretched a bit. It'd be an aggressive trade. You'd have to think that this is going to continue without any pullbacks. I'd probably not do it personally, but it is valid. It is valid for a scalp. If you assume that it might go higher. So let's see if they print. Okay, blue box. That's good enough. Let's see if it would have worked. I'm not going to take it because I don't know where ES resistance is. I have not charted it. But I assume since NQ is running into resistance here, ES probably has resistance here too. So let's see if it works. My guess is it works for 3 points, but maybe not 10. So the entry would have been, like I said, I did not take it because I haven't charted the area. 44, let's say 45. So do we get 48? To 50, let's say. Let's see if we get to 50. Like that seems like a stretch. We've got opening range high. No, opening range low. No, it couldn't be. It's got to be high. Is it high or low? Let me see. Yes. It is 30 minutes. Okay. Opening range low. Above us. And we've rejected out of it. So, yeah. You're trading right into resistance. So, it's dangerous. But technically, if you think it's bullish and momentum has been bullish for the last hour, it could continue. Now, if we can get a bearish bar underneath the dotted line and put the yellow line underneath the dotted line, we can start looking for pullback shorts, which I think will probably work better. Because this has already done quite a bit of movement without much pullback. But it is an apex trap. We got underneath an apex and trap back in with a bullish bar. We're above the magic line with the bullish bar. So I mean there's reasons it should work. The only reason it won't work is we have resistance above us. That's really all there is. So like I said, I think it'll probably work for 3. I don't think it'll work for 10, but it might. But just gives you a good example of the type of trading I'm doing. And see what that means is that I don't really care whether or not we close bullish or bearish. It doesn't matter to me. All I need to know is where's the momentum right now and where's the opportunity right now. Like where we close and where we open, the only thing I care about is whether or not there's a level that I can get 10 points on, you know? So it's not that important to me. The direction is not that important to me. And when you realize that it's a whole lot easier to reach a higher win rate when all you need to do is get 10 points to give you 1-to-1 risk reward, you realize that that's actually it. There's many opportunities to find edges if all you need to do is find 10 points. There's not a lot of room for edge. Not a lot of edge, in my opinion, in trying to find a move that goes on for 3 days straight. And if you do find a move, an edge, and find something that tells you when the chart's going up for 3 days straight, you probably aren't going to get 1-to-1 risk reward on that more often than not. or you're just not going to have something that is very consistent. Maybe you can get 2 to 1, 3 to 1, 30% of the time. That's definitely a thing. But I personally, psychologically, wouldn't be able to handle trading futures and losing 70% of the time. I just couldn't. I mean, it's hard. Like, just trend trading and trying to, like, hold the trend, and then, like, yeah, that's really tough. Like, buying pullbacks into moving averages and stuff like that. Like, I mean, I'm not saying it doesn't work. It's just a lot of the times it doesn't, and the couple times it does, you'd have to hold real strong if you want to make up for the 70% of the time that you're just wrong. So I would rather just pick the 10 points that I think are easiest to get and get those over and over and over again. But that's just me. The fact that this hasn't hit its target yet would make me start to wonder whether or not I'm like trading into resistance, running into a bad time of day, trading like usually when these work, they work within the first 2 minutes. Because it's a momentum trade in this case, right? We're just going with momentum, expecting another higher high. So that shouldn't take this long. So I would have already probably given up on this for a small win on that little push when it pushed up and it couldn't break this high. And ES, I've got the DOM too, and ES's DOM is just a little bit easier to read than NQ's, and you could, it was visible on the DOM that there was suddenly a seller here. So most likely, assuming this closes bearish, because I think it will, there will probably be an aggressive signal on this bar. But if they trap him, then it's going to go a lot higher. So let's see. What's NQ doing? Nothing. Yeah. But we did get VZO over the 0 line. That's certainly a plus. The MACD I just used for what's it called? Divergence, and I probably don't even need it, honestly. It's not a key part of my strategy. It's just added confirmation for reversals. If I'm trying to find a reversal, I prefer that there was MACD divergence recently, because that increases my my win rate on those reversal trades. And the reversal trades are really not the highest odds trades that I have. Like, they work probably like 55% of the time, let's say, but not like these where I can get 70+% win rates pretty consistently. The reversals are hard. Yeah, so here comes the aggressive seller. See? So that was, if you were watching the DOM, you saw that potentially early. Now, I'm not taking the short, though, even though I see an aggressive trader. Again, I've said this before, but see how they got the aggressive trader signal? The star? Okay, so we got purple bars under the dotted line. We need a bearish bar for confirmation that sellers are in control. You could have been aggressive and followed that guy in. I'm not saying that's wrong. You could have done it way up here. He was visible on the footprint and the DOM way up here. But the problem is that until I see follow through on bars that aren't purple, I don't have confirmation that pullbacks are going to be sold. So we could just go like that. And I don't want to sell if I think that might happen. Okay, here we go. If they can close this bearish, pullbacks can be sold on ES. Did they do it on NQ? Yep. Oh, not yet. Same thing, purple. It would help if they both got a sell bar. Now, it's a little bit arbitrary because it depends on what chart you're using, right? Like, it's obviously not 100%, and there's not like a perfect way to do it, but it's a pretty it's pretty consistent. Not 100%. Nothing's 100%, but it's pretty consistent. So if this is a star up and you're still bullish, you can technically take it because it's another trap back in. But again, I see momentum shifting here, so I'm not going to take it. But you know, even though that other one failed, by the way, that would have stopped out. That other long that I didn't take on ES would have stopped out already. So it would have been a small scratch, not a scratch, but a small loss, because it didn't reach 3 points, or 5 points, whatever your technique was, and we know why, right? Because there was resistance up there. There we go. So we got the sell bar. So now retests with aggressive sellers like orange bars or stars that are yellow that come up here or off of the dotted line should be sold generally. Let's see if NQ can do the same thing. Because between the two, I would rather trade NQ, but and I will say there's possibly some. I've seen evidence that when one of the two give the signal, but the other one doesn't, the chance that continuation trade works, it decreases. So because they often move together. So if you have enough screens, watching both and waiting for both of them to confirm first will improve your win rate. Because on the days when they're not working together, trading is not very easy. All right, so we need NQ to get to 69, but we're not going to short there, right? We're going to wait for the pullback, accepting that we might have missed the only entry. Oh, there we go. Okay, so we've gotten confirmation that it's bearish. Now I want a sell up here somewhere, like 88. I want them to come up there and reverse out of one of these, like reject out of one of these. I don't care which one. But I need a retrace and I need an aggressive seller. Oh, I missed a text. And sometimes they just leave and never come back. And that is just the way it goes. Because again, we got this. You could have been aggressive here. They both got the star. So like, if you're the type that gets tilted if you miss moves and you don't mind holding through a retracement, you can trade aggressively when you see the potential for it to happen. But it wasn't confirmed until here. But now that it's confirmed, they often do come back and try one more time. So I'm okay. Since this one doesn't work 70% of the time, I'm okay waiting for the one that does. Even if that means that, I don't know how often, but a chunk of the time, it's just never gonna set up for me. You know, the layup just doesn't come. Like you just get covered. You know, and if you're covered, you're not gonna you know, don't shoot the ball. But so much of good trading, like professional trading, is just waiting for that setup and not doing anything else. Because once you realize that you can just do that over and over and over again, even if your setup only comes 3 times a day, if it's got a high enough win rate, you can take pretty high. You can build your account really quickly. And then with a bigger account, maybe trade bigger size if that's fitting in your risk tolerance. And yeah, that's how people build accounts. And then, like I said, that along with stumbling into 1,500 point moves with runners, that helps too. The slow grind down is probably one of the harder price action types for me to trade. I don't do well when it goes in one direction but without any volatility, regardless, up or down. But I'm better at up because I've had more experience with it. But especially the down, the slow bleed, and the fact that you can literally aggressively trade the breakdowns for 10 points consistently, even though there's seemingly no volatility, it's just one directional. there are ways to do it, but I find it challenging. As soon as I want to, as soon as I decide that maybe it's time to go ahead and just admit that I'm going to have to be aggressive, it's like the opportunity to be aggressive has ended. But there's no change in speed that hints you to that. Whereas when things are going fast and down, as long as that speed stays up, you can be relatively confident that that seller's still active. And usually you get like a period of like slow chop and absorption before it reverses. But that's not how it works with slow bleed. With slow bleed, it just goes to wherever it's going and then like just gets absorbed and then can V back up. So, and knowing that, it's very easy to think you're seeing it over and over and over again. And so if you try to fight the slow bleed, you can get absolutely crushed. But then if you're not aggressive enough in the slow bleed and you wait, for like too many breakdowns and then you decide to take one short, you can be the last. You may be the last retail trader to short that day, and that is frustrating to say the least. So out of all I find like balance days much easier, and regular like volatile days like yesterday, I find that actually easier to trade than this, where it's just like down and then one bar up and then down and then on one bar up and down. It's just like it feels like it's never ending, but you also feel like you're getting left behind because it never comes back to the level you want to actually trade at. And so being able to be both flexible with your style, whether or not you're, trading pullbacks or breakdowns, but also inflexible when it comes to your rules for when you can reverse and when you can, what you need to see before you know that trend is potentially reversing. It's a very, 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 it's a skill if you can do it. Let's just put it that way. If you can do it well. So the smaller time frame helps me a lot. I'll use this smaller time frame, and you can do the same thing with ES. I use the 4 tick on ES. Where'd it go? Oh, I've got it listed as 5 tick, but I think it's this. Yeah. So you can do the same thing if you want to. You can use a smaller time frame to give you like more information on these like mini pullbacks, but it is the win rate is lower, for sure. The win rate is lower. But I will look, for instance, to see when, like if I'm looking for a short in slow bleed, one way you can do it is watch the smaller time frame for when it looks like it's getting bullish. And then as soon as that bull move begins to fail, look for the entry. So you let the smaller time frame like push as far as they can and then fail to continue. So it'll actually look bullish. Like you'll get these traps and they work for a little bit, and then suddenly an aggressive trader will come in and sweep that up. So you wait for the bull move, and I've got these color coded here to kind of warn me when that's happening. It's not a buy signal, but it's like somebody's buying, right? And that's what I need to see before I consider selling. If I'm going to short with the trend, I need a buyer to trap. So this is my buyer I'm trying to trap. And so he comes back up here. They aggressively sell him right here. So you could follow him and be the very first one to take it. It's aggressive, but it works in this environment. Or you wait to see who wins this area and then sell when they can't push it any higher. And so if I watch this VZO, if it breaks over the zero line like this, if it does, it depends where they're going to close it. But if they can close this bullish, then I'm looking for that breakdown out of the zero line to sell it. Which could be the next bar, it could be 3 bars from now, we don't know. But if they just reject the zero line right now and they can't even close a single bar bullish here, like the breakdown's probably an acceptable place to trade short. It's just uncomfortable. We do have a voodoo range level here on ES, 41, 34, 25. I don't have it marked down here because I wasn't trading, but we're close to it. 41, 34, 25. Very close to it. Here. Okay. Oops. Let's see here. I think I missed it. Shit. Ah. Did I not lock it? You bastard. Oh, I see what I did. I went down the wrong chart. Okay. So they came right to it. Yeah, see, they couldn't even close a single bar bullish, and see how that ended up staying red now because it wasn't closed. Remember, nothing's valid until the bar closes. So that rejection is exactly what you tend to get with slow bleed. And that's why, like I said, you can just go to the smaller time frame and sell stars. Like, it's not wrong. It'll work. But it'll stop working suddenly. So when it stops working, you're going to take a stop, and then you need to slow down. But it does work. You just need to know that, yeah, you need to know your environment. Okay, so we're back into the yesterday's point of control again. On ES, on NQ, sorry. Possibly ES too. Remember last time we bounced, right? Here. So they're gonna, I would not be surprised to see them try to save this. It's too bad that we didn't get an easier sell signal other than this one. We had to be really aggressive to take that, and I didn't want to do it. I will change how aggressive I am depending on how my P&L is doing for the day. I'll be totally honest. I definitely do that. I know it's not optimal, but when I've been like working hard on a smaller size and like just barely grinding out like an average day, I will slow down in the afternoon and wait for the conservative, excellent A+ setups and skip all the B+ setups. But if I'm like negative, you know, if I'm down like but nowhere near like my max loss, but let's say like I'm down one stop but I've been trading all day, I'll take the aggressive trade. And like I said, that's probably more of an emotional decision than anything, and probably a leak, but that is definitely something I'm aware I do. I journal about it all the time. It does not always work out to my advantage, but it's a tendency. So I'm not suggesting anyone do it. I'm just saying that most of us do. You may not be aware of it, but you probably do. So it's not always a mistake. Oh, hey Nathan, cool. I just saw your chat. I didn't have that on a screen on its own. I agree with you. Okay, so they're trying to hold this. See that? Like right on the point of control from yesterday. Sorry for the jet. I'm by Air Force Base. They're noisy, especially around this time till like lunch. All right, double star. If it's bullish, they're gonna have to lift it there. That should be pretty strong. And the location makes sense, but I see no aggressive sellers trapped. Nothing. This blue outline is a new signal that basically says if we can now cross that dotted line, it'll be bullish. But the dotted line now is way up here, so I don't know what to do with it when that dotted line is so far away. Probably just ignore it, to be honest. It's probably just, it's going to go short, it's going to go lower. But they usually are pretty good take profit signals. So like if you were short and you see a series of these, or even one of them, it makes sense to get out. And then if you look for the low, like if you go back and look at lows, the lows usually had blue around them. So maybe not at the low, but right around them. So it's just a warning signal for now. I don't know exactly how I'm going to use it when it comes to setups, but I have seen that blue outline followed by an aggressive up can sometimes give you a lift, but it's not consistent enough. It doesn't always reverse the trend, and you sometimes only get like 5 points. So there must be something more to it, or else it's just not an edge that's big enough for me to take advantage of. So this had bullish divergence on a smaller time frame. This bar, delta divergence. So there's sellers in this wick. In fact, all of the green outlines have a lot of sellers in the wick. So they are potentially trying to trap them. And if they can't break this low, then obviously it goes higher, but that would suggest that the sellers are actually trapped down there. It's unusual to get this many green ones in a row, I'll tell you that much. Especially when you do green outline and then immediately break it, it usually just goes lower. So the fact that it did another set of them here is unusual. And then actually it's here too. This one immediately broke and they printed another one. Well, they might just break this one, I guess. Let's see. But see, when you print one and then you immediately break it, it usually goes lower right away. So this pattern is unusual. But it might just be a little bit of absorption because it's at the point of control from yesterday and then we just ripped through it. That certainly might be the case. But failing to get under these would be a sign that those sellers are trapped. The orange line is a previous low from I think 2 days ago. Not an unusual place to trap sellers below a previous low. Not unusual at all. This would be a very interesting place to try for something. See, the hard part for me is that it's already tested here. It's like the third, fourth test. 1, 2, 3. At least the third test of that, the top of that VPOC. I feel like the back of it is probably going to be tested. And like I said, it's just really hard to read when it's slow grind because usually slowing down and holding here is when it's volatile, it's oh, we actually might be looking for a bounce. But when it's slow bleed, it's not always a bounce. Sometimes it's just a resting point. And then they'll go up and then roll over. My dotted line is still way up here. So sellers have not been able to get aggressive volume to follow them down. So that is a sign. Oh, there it is. Got shifted. See that? Dotted line got shifted down. We're going to find out right now who's in charge. And we'll probably get a trade opportunity. So pink bar above, that's not good enough. This one closed above it, but the yellow dash was below it. So no buyers are willing to take part and follow this aggressive volume. So we had the hint down here with the bullish divergence. And now they're trying to take that, but it's shifted. That line has shifted down, and now they're gonna have to defend it. Oh. Now the VPOC, the yellow dash being right on the line, I've found is not good enough. It can't just be on the line. It needs to be above it to be bullish. That one was definitely below it. So it's looking bearish at the moment. Let's see if we can get this to be trapped. Otherwise, that might be an entry, actually. Now that I think about it. Is that that might be an entry. Short. I think I'm gonna wait and see if they can trap above him, but that might be a short entry. We're very low into the lows, so it's pretty aggressive. But considering where we are, it might be good enough just for an immediate aggressive entry. But let's see what they do here. Those circles are weird. They work better as secondary soldiers. They do not work well if it's the first attack. Yeah, I kind of thought that might be it. that was your entry. Shit. That was quick. They're really aggressive. So that's what's interesting about slow bleed. Perfect example there. It looks like they're giving up, and then the moment they get any volume, they just push it. So it's like slow bleed, rest, slight attempt to go bullish, and then punish. So see how VPOC fell back below, or I mean not VPOC, volume zone oscillator fell back below zero. That would normally, it was a little late there, but that would normally, and the brown is the kind of the confirmation that bears are trying to continue this trend lower. Oh, interesting. They trapped somebody. Fourth test. They really don't want to give this up. Oh my God, are they going to put a bull bar above the dotted line? Oh my goodness. They want it. They want it bad. But see, it's just so hard to read because it's slow. For me, anyway. Very hard to read. Okay, if they... Oops, sorry. If they can get this to close... Yeah, I don't know. They need it to close bullish. But see how deceptive that is? It's like, it looks like they might actually do it, you know, and then sometimes they'll just be like, just never mind, I'll give up. Oh, are they going to get it? This is a very small time frame, so this one's not as good as this one. This close would be significant. If they can get to like 58, that would be significant. This one, less so. It'd be better if they both closed bullish. Let's put it that way. It's a really aggressive entry, but it would certainly be a good sign for bulls that they might actually be holding this level. It shouldn't have been that hard to break under this. Oh, they're going to do it. Never mind. See? Very deceptive. There's the aggressive sell. Ugh. See, now the dash has been shifted down to the dotted line, so now this one's no longer significant, even if they close it bullish. Clever. And see, this one closed bullish, but the VPOC is underneath it. So I think sellers are actually going to defend this, if I had to guess. Oh, there it is. Okay, 15 tick got it with the dash above the dotted line. And that's on the dotted line. So the 24 tick hasn't quite confirmed. They need one more up bar that's not pink above the dotted line. And then this low is probably safe. And basically any pullback would be viable. But they need it. They need another bullish close, unfortunately, because this one was right on the line. It doesn't have to be consecutive, though. It can be bear, bull, bull. So they did get this one. This was a dominant wave. I mean, you could try to buy this pullback if they show up again down here. If you get another aggressive signal to the upside, it'd be aggressive, but like I said, those reversals aren't quite as consistent as the continuation trades, but it would be valid on this time frame if they do it. So like a star up here, one of these blue boxes showing up here. But like I said, I would have preferred that this one closed bullish with the VPOC above the dotted line, and that does not appear to be happening here. This time frame, they've already pushed, the time frame that matters, they've pushed the VPOC lower than the dotted line. So even a bullish close here wouldn't confirm it anymore. They need that VPOC to gradually and like shift higher. And it's just not happening. which suggests there's someone on the offer just like making sure that any volume gets absorbed. Oh, that was a big one. Shift it, shift it. If they can shift it up at the last minute, that would do it. And I'd probably take it. I might take the 15 tick. It's tempting. Okay, let's try it. Momentum is questionable whether or not we have momentum to the upside. It's an aggressive reversal trade, right? So I'll try. If they don't have any follow through, it's not gonna work, and you can just exit. But let's see, not you, but me. Let's see if they can hold it. You wouldn't want to stop any bigger than like 18 to 20 points here, for sure. And you could probably get out earlier than that if you see signs of aggression to the sell side. Because they really need to follow through almost immediately. Like one of these needs to just pop. And not drop. The harder part's going to be where do we take profit? It's not wrong just to take the 12 points and run, especially counter trend. That's almost never a mistake. But the fact that this VPOC from yesterday keeps holding makes me really want to try to like catch the turn, you know. But it's not necessary. It doesn't mean the low is in. It just doesn't give me that much information. Okay, there we go. That's a nice little trade. Okay, the red means if it closes bearish, I need to get out of the trade. If it closes bullish, we're fine. Gross. Follow through. Follow through. So see how we didn't get the VPOC above the dotted line? It's technically not confirmed yet. And then a pink bar wouldn't really do it either. So if they put a pink bar here, you know, it's not wrong. I mean, it's not wrong to exit anyway, right? It's a good trade either way. Like, it's a good layup either way. Especially since I entered aggressively. Generally, I want to exit aggressively as well. But I just would like to see it continue. Obviously. But if they just put in a pink bar here, I might and then stall, I might just have to exit. Because it suggests that they're just not ready yet. If they squeeze like 3 pink bars in a row, that's great. But we need to see some dominance here to confirm that bulls are actually taking this, and you'd expect that to happen relatively quickly. And the longer it takes, it's just like, do I really want to be in this trade? If it's not a pink bar and it closes bullish, we have to hold. And they can still steal it from you, you know. It's not until you take profit, until you exit, you can still lose. Like I said, it was not confirmed down here. Oh, let's check and see if it was confirmed on ES. Oh shit, it's far from being confirmed on ES. Damn. Far from being confirmed on ES. Interesting. That makes me like it a lot less. Oh, give me that bullish close, please. Wow. Now, the thing is once we get the bullish close, they usually give you a pullback. So it's not a bad time. It's not a bad time to take profits and then buy a pullback. That's not wrong either. Like, how you manage it is an art. But it's now that they've gotten that confirmation, we know it's not bearish. So if you just want to put your stop the low and let it go, that's fine, right? I can do that. That's acceptable. Otherwise, if I want to take profits here and then try to get back in on the pullback, that's also okay. But realize that you won't always get a significant pullback. But usually the pullback will be bought. My concern is that the dotted line here is way far away on ES. Oh, nice. We shifted it up. See that? So that gives me more information. Now, they could just reject it, but if we can continue to go higher, that would be a very good sign. Oh, they shifted it back down. That's not good. That's not good. They need to immediately lift this, otherwise it's going to fail. We estimated a new low here, but NQ didn't. Not a new low a day, but a new low in this low got broken on ES. See that? Okay, that VPOC's got to shift for this to count. See that? I mean, technically we've already had it, and this would be the pullback. So it just needs to be bullish, and it can continue. We've already gotten the confirmation. I'm wrong. What if it's a star? I can actually add. Okay, I'm adding another one here. Okay, it's a little bit of aggressive strategy, but I will take 10 points if I get it on that ad. And then I'll hold a runner as long as they want to let me go. I'm a little nervous about this line being so high on ES. All right, I got my 10 points, which is great. So now I'm back down to just 1. But it means it's a free ride. So I mean, it could pay me whatever it wants to pay me. It's free now. My stop is paid for. So that's the benefit of adding there, is now if they decide that this is the low, I get a free look. And that's what I mean by like stumbling on a 100-point trade. That's how that happens. You get it to set up where you know that it's going to give you 10 points more often than not, then it gives you another opportunity to maybe add, or you're just more comfortable taking more than one contract. I was just trading smaller today. And then you take your points and you let it ride, and whatever happens, happens. Because sometimes these turn into monster trades, sometimes they don't. It is a reversal. But you can see they tried to shake you out, right? After they confirmed, they tried to shake everybody out. And on ES, they really tried. So, and see how the green, we identified here too, that we had tons of green at the low, right? Tons of green at the low. Those are now trapped sellers. So I would not want to be short this. Doesn't mean it can't go lower, but it's going to need some new seller to come in and push it down, which could happen, but until I see evidence of a new seller, I'm just gonna chill with my long. Now, if we wanted to go and find some targets, we could go to the higher time frame and say like, okay, like 614 or maybe 610 is totally doable, right? Like that might be a reasonable place to think about taking profits up there. If we didn't think this was going to break, you could take profits at like 610. 610. Otherwise, you can look at this and say, do I have, is this reasonable support? Does it make sense that they would hold this? Or are we probably just consolidating and then rolling over? Sometimes you can tell from this higher time frame whether or not it's got the potential to actually do anything. Sometimes you can't. But, I mean, here, I think this does look like a pretty significant resistance. I don't know if we'll get there. But if we do, I would not be surprised if we at least get a retrace after 610. I might be lucky to get 610. I don't know. I wonder if I could exit if they close a bar down here. I think I can, because the re-entry here would have stopped underneath this bar. So I believe if I get a close under this star, I can probably exit the trade for a very small loss. Since we got that re-entry, pretty sure that should hold. You could technically slip under it for a couple points, but it shouldn't close a bar under that. It would suck if it's purple underneath there, because then you might get re-triggered in. So the yellow bar, we don't want to see that yellow line close bearish underneath this dotted line. When the dotted line shifts up, we need to continue momentum higher. Otherwise, the trade's probably busted. So we really need to see buyers show up like in this bar. Doesn't mean they will, but that's what I would need to see. Otherwise, you could probably get out. You could break even maybe. Oh, nice. They shifted it down. Let's see what that does. Yeah. Come on. Trap one. And there's still a whole other 2 hours left of the day, you know. And I don't think there was really any reason why we sold off other than crude inventories. Like, we've got CPI next Tuesday. We had some Fed speakers. They probably said something, but it's never anything new, you know. Doesn't mean it has to go higher. I'm just saying, I don't necessarily think the selling was all that convincing. Someone was obviously selling, but it like I didn't see any change. I didn't think anything changed other than the fact that there was actually a seller present. So as long as that seller's done, and it appears he is, I I don't see why it can't go up. That's what I'm trying to say. I don't see why it can't go higher. Like sometimes there's like a macro change, like some new information came out and now it makes sense that like people who wanted to be long now want to be short or whatever. Like if that happens, like then you got to respect it, right? But if there's no change, it doesn't mean it has to go that it has to go up, but it basically means it doesn't have to go down. And they probably were a lot of sellers that took that low because they were aggressive down there. We saw it. They should get like especially when they put stars like this, and then if we can immediately close higher, like it should go higher. There we go, star diamond. That should be good. They should rip. That's actually another entry. I'm not going to take it. I've already gotten my ad. I'm not going to get too fancy, but that should help because that's an entry in and of itself. Star down, diamond up when it's bullish, rips. Usually pink bar and then higher, but not always. They did have a pink bar over here. We might need a little bit of a pullback. Because again, the pink bars mean that sellers are pulling their orders, and that's why price went higher. But usually you get a pink bar. There we go. Nice. Go. Oh, come on. Give me that pink bar. There we go. So you can actually buy this too. Woo. Good day. Good day. Good day. This is fun, right? This is how it's supposed to be. So I want this pink bar not to get retraced. And then we're home. We're home free. We need a pink bar not to get retraced. Don't do it. Yeah. Go, go, go. 20 more points. Come on. I'm not even asking for a lot. So we're back into this resistance. Now remember, we have tested this resistance twice. So it's possible that we just rip through it, right? Like I don't have to sell it at 10. I don't have to. And right about now is where I wish I would have taken 3 contracts. Because it's like, sure would be nice to get another one off at 10 and still have one, but you don't want to be too greedy though. No, don't retrace that pink bar. That would suck. Thank you. So see how they can't get through the pink bars and they go higher? That's usually a sign of strength to the upside. Usually. This is a very like this. Pink bar, can't retrace it, go higher. But they did have 2 in a row here, which is they like to retrace them when there's 2 of them. It becomes like a when it's a sequence of them, it becomes like a low volume node. Basically. Especially when it's like a bunch of them, 2 or more, like consecutively. Taking their damn time. Now remember, this is resistance, right? So like, I'm allowed to sell anywhere up here I want, right? Like it's a good trade as it is. I could just rip it off and be like, hey, that's a good trade. I got 30 points. I'm happy. I got, like, there's nothing wrong with that. But I am working on trying to manage trades optimally. So I'm not going to do that. But when it comes to like what the actual result will be today, I don't know what's best, right? It might actually be best just to sell right now. Like that might actually be best case scenario. But I know over a string of trades, I can usually get this back up to resistance. Maybe higher. So I'm going to hold it for today just to demonstrate that, you can when you're working on something, you gotta prove to yourself you can do it, right? So I'm not trying to prove to anybody else that I can do it. I'm actually like trying to talk myself out of getting out of the trade, because usually I'd be exiting here, but I'm trying to practice pushing it a little bit. Particularly when I have a location in mind, I know it usually gets there. Like, I'm pretty good at figuring that out. And when I don't trust myself and I exit early and then it goes there, it doesn't help. I don't become a better trader, But if I see the location that I want to get out and I hold the trade and it gets there and I get out at my location, there's like, it's evidence of growth, and that to me is actually more valuable than profits. So I'm okay. It can go to 650, right? Like it could go to 12,650. Like, I don't know. I just would like to see it go to 12,611 or 10 or whatever I have my sell at, so that I can say, hey, I found a location, I stuck an order there, and I didn't fuck with it, right? That's what I need to practice doing. Because whenever I share targets and stuff, not always, but they're usually hit. So why not get paid for doing the 10 minutes of analysis? If I had 3 contracts rather than 2, I would be holding one and letting one go at 610. And if they get to 609 and can't quite get to 610, I can definitely get out. But I want to at least see them approach this area, right? There's nothing. It's no matter where I get out, it's a good trade. Let's try to put it. I'm trying to say that, right? Even if they get stuck at big figure here, like, still a good trade. But what I would really like is just to get filled and get to say, I saw a target, I picked a target, I took the trade, executed it perfectly. I don't care where it goes from here. It's good enough for me. That's growth from like the perspective of like how to get better. Because I know that's optimal over time, is to pick a target and get it. We definitely nailed the squeeze. We nailed the turn, though. No question about that. And they are going to need a pullback here eventually. But that was a pretty good trade. We are getting yellow up here. So if we get through the dotted line, oh, it's way down there, then we know it's over. If we could shift that dotted line up, that would help. We're running into this anomaly here, which kind of sucks. But we've traded through it before. It's probably finished re-auctioning, but you never know. I'd very much prefer they not go very far back down. Very much prefer. We want to see this guy beaten immediately. The red outline suggests there could be buyers stuck at the top, and if they're nervous, they'll not defend. So we want to see them defend that range by pushing back through them. And then that aggressive trader could get trapped for the next move up. But if instead they start pushing lower than that, it's going to go sideways or pull back. So we're right at that level that I indicated was important earlier, the 90 level or 89 level. So it's probably just establishing a new support. I don't think it's the top, right? But again, totally acceptable just to kind of be like, hey, I traded, it's a good trade. I'm happy with my gains. I'm just going to take it and go. Like anywhere in here is totally cool. I just picked a spot and want to practice getting it. But all I'm trying to say is I'm not saying I'm right. I just need to get better at holding. Particularly when I have no risk. Like literally zero risk. I've already paid for all the risk. So it literally does not matter. I had a fine day before this. So the only benefit of other than the profits are nice, but the real benefit of this trade is to practice doing things right, staying on process when it comes to exits. Because I'm pretty good at entries, but exits are freaking tough. Star on the 15 tick. Purple bar star. If it's bullish, it should go. They need to hold this. Come on, save it. Oh, that's frustrating. Oops. Looking at only one side of the chart here. So they gave up. They were unable to retrace this red candle right away. So they're potentially in the process of a pullback is what that means. And now they've shifted the dotted line up. So if they close a bearish bar here that's not purple, I have to get out because it means that it's probably bearish. They might give one more try. It doesn't mean it's going down immediately, but it means I need to be looking for exits. I don't have to like auto exit, but it's usually a sign that things are not as strong as you thought they were. So they need to close bullish here for this to continue higher immediately. Otherwise, we're in some process of a pullback, which could go all the way back to my entry, right? Like it might not, but it could. It could go further than that. Okay, so they're right at that magic line there, and it's acting as resistance. So they're struggling to break through the big figure. That's big, and they ran into the anomaly. Damn, they got to save it, otherwise I'm out. Because now it's not going to be purple, and I don't want to hold all the way back to break even. It's still an okay trade, but it'd be unfortunate if it stops here. But I'm gonna trail it because I'm happy with my gains. If they can't save this. They're trying. This is usually how they get through this higher time frame resistance, by the way. You do these little pullbacks and then attack it after you've trapped some more shorts. So it doesn't, just because it makes a pullback doesn't mean it's done. It's not done until it's done. But you got to draw the line somewhere. Because at any time it could be done. And every time they try it, it's costing them more buyers. So it makes me less and less interested in the trade the more times they try and fail. Like that, like if this fails now, I'm definitely just going to let it go because this is like the third attempt. And if they can't get the job done, they can't get the job done. Damn. All right, I'm exiting. I could have waited for a little bit of a retrace to get out, but it can sometimes just we've seen it. You know, it could just V, so, or inverse V. So once they got that dash line underneath the dotted line, I'm assuming that they're going to be selling retraces, and I don't know how high they're going to let me get out, so I just exited. It's still decent gains. You know, I mean, still got a K for the trade. So like, cool with it. Just unfortunate that it didn't quite reach my target. But like I said, the important part is to do what you plan to do. Because if I keep practicing doing what I plan to do, and I am decent, if you're good at finding targets, then you're gonna do better that way. Now keep in mind, if I would have just taken the trade at 10 points and just said like take the layup and walk away like I did earlier, then I would have only made what was it? 10 points, it would be 20, like 250, right? So by giving myself the freedom to let it go and identifying that it had the potential to go higher, even though I didn't know it would, like that right there added like $750 of value to the trade, even though I didn't get out at the high. Like I gave back half of that trade. You know what I mean? Like I gave back half of it, giving it like 3 chances to try to get out of here. Will the fourth one work? Like maybe, you know, it could. But you have to draw the line somewhere and kind of say like, okay, I'm happy with $1,000 gain. I wouldn't be happy with a $300 gain. So gotta decide where in there you're gonna draw the line, and then realize that the higher you draw the line, the more the higher the likelihood that it's gonna sweep you out and then continue to your target, which totally could happen, right? But the fact that I did it right down here, I didn't want to give it all back, you know. But there is some the way my coach does it, and I don't disagree with him, is in this situation he'll actually leave his stop where it was initially and let it roll all the way back, because he's so confident that his direction is right. I don't quite have that confidence to turn a winner into a loser, but if yeah, I mean it's unfortunate though, especially since it actually got very close. I was within 8 points of my target, but like I said, you got to pick a spot, and how you do that is up to you. But that was I had one other opportunity to get out a little earlier, and that was when this star got hit. I said that really shouldn't happen, and so exiting on this last attempt would have given me an extra 5-10 points, right? So could have made 1250 instead, but like I said, I went into that thinking I don't care whether or not I make money on this trade. I just want to do it right. I just want to trade the process because I've already hit my goal for the day, and so now it's just do things, practice being consistent in your execution, And like I said, I'm pretty good at that when it comes to entries, but I've been too anxious with my exits. And so I identified, I said it, this is a good time to exit. You know, if it wasn't for the fact that I'm working on this, I'd be chickening out here. And in this case, it would have made me feel great getting out when I said that, right? Which was like in this bar, or no, this one. I said, you know, if we can't retrace this, it's probably done and it's okay to get out. It, like when the results look like this, like it rewards that behavior. The problem is it's not always like this, right? Sometimes it comes up, it pulls back, and then it goes another 200 points. So you have to decide, like, where am I? What am I happy with? Do I care? For me, the difference between exiting here and exiting here was not worth the giving up the opportunity to get up here, and that was just a judgment call I made, right? Um, but the good news is with my rules, I might miss that target more than my coach does, but I'm rarely gonna turn a winner into a loser. But if for him, if it came all the way back to his entry and then bounced, he gets paid, right? And I get paid too, but I don't get paid as much. He gets the full amount because he trusts that he had this entry correct and that this reversal was strong and that it's very very unlikely that we're going to trade under here. So he'll just hold it for the rest of the day and get out at his target. And like I said, that's something I can aspire to, but I don't quite have the confidence yet to give back a K, you know, uh, knowing that eventually it'll work out to my favor. It's pretty tough. It's pretty tough. One thing he's recommended that I could have tried is when you have that identification that you're going to have a pullback, you get out of the NQ and then the moment you see some sort of attempt to reverse, you get into like two MNQs, like really small contracts, risk like $40 per trade for a point, right? And then put your stop down here where it was when you originally got into the trade, and just see how it works and get a feel for what it's like when it pulls back and bounces. Because if you always exit up here or at break even, you'll never know what it's like to let it pull all the way back and then rip all the way to your target. You'll just never be in the trade. So, yeah, that's the other way to do it. But I was already down to one contract, so which is equal to 10 MNQs. So I had one NQ left, and I just held the NQ until this one closed. And by that point I was just like, you know what, I've already given up like more than a third of the move. I'm not gonna wait for this to bounce. I'm just gonna get out. We can always re-enter if it retests. All right. Anybody have any questions or anything? Let me know. I'm gonna run to the bathroom. Actually, give you guys a natural chance to ask some questions. Let me grab a new water and actually maybe I'll do a monster drink. Make sure I don't fall asleep. We'll watch the close together. But if people have questions, you can always post them. Here, let me show you ES to. There we go. Okay, I'll be back. All right, guys. Slight change of plans. I've actually got to go help out a buddy. So everybody trade safe. Like I said, I'm glad that that one was able to work out. But I don't want to leave a team member in need, and my team's more important than these streams. So I will be back tomorrow, or else maybe tonight if people want to do um, a London session. That might be kind of fun. But just remember, you can always watch these on YouTube anytime. And this one's getting pretty long anyway. But good luck, you guys. Take it easy. Be safe.